So what we've been seeing recently, as I mentioned, in the market sentiment tool, the 13 broad-based indicators that have set up there, things such as put-call volume ratio across the market, number of SPX, I should say, number of days up or down, percentage of stocks above their 20-day moving average, new 52-week highs, the percentage there, TRIN, VIX, SPX gap, stocks over the SMA 100, those 13 broad-based indicators where the fences are set. And right now we've gone into the bullish buy sentiment. We were seeing light buys we were seeing light buys last week, I should say. That's when we first started to see a couple of those light buys. Yep, there was some back in 10.6. We started really to see the light buys here in 10.20 at 42.24 as we dropped. The numbers changed a little bit. We got up to 4. Then, of course, we saw what the market did a little bit today. It went up at first, then came down. Some stocks did well. That Intel position we mentioned was actually up 5% after the earnings. That bull put spread, the reason why the customer was not seeing any change in the price in an out-of-the-money bull put credit spread with 5 days to go to expiration, roughly to the 27th, was the fact that earnings came out last night on the 26th. So the implied volatility kept the options almost at the same price, relative range out of the money. So everyone was waiting for the earnings and was waiting to see what would happen. And then the implied volatility crush would happen. And the stock moved up about 4.5%, 5%. I think it moved up about 5.5%, but at the end of the day, it closed up maybe 4% only. Because there was that pullback at the end of the day. We fluctuated a little bit during the day there. But what does all this mean? What this means is based on the fences that have been set on those 13 broad-based indicators, we've moved to 7 bullish indicators, 6 neutral, and no bearish. So the market sentiment has moved from the light buy to the bullish buy sentiment. Not a strong buy, but this is the first signal I usually look for, and I might look for a second. My guess is next week I'll probably be opening 2 new married put positions in the Fusion portfolio, maybe even 3 within the next 5 or 6 days. And I'll be looking to do some more bullish positions going forward with implied volatility now still relatively high in those cases. How are the fences set? Well, each of these 13 indicators that we use for the market sentiment tool, Ernie tested probably 45, 50, 60 different indicators to see if they gave any kind of leading premonition of a market change. And ones in combination with the other, which were the ones that gave the best sort of influx of potential market warnings, maybe 5 days, maybe 10 days. It all varies based on market conditions at the time, of course. But let's just take the put call volume. Let's take the SP. No, sorry, folks. We'll just use this percentage of new stocks hitting 52-week high, 52-week low percentage. So what Ernie did is essentially looked at all of the points over time, and I'll show you the time frame in a moment, but all of the points over time when any value was hit for these particular indicators. So as we can see here with the percentage of new stock 52-week high and 52-week low, we are currently at a rating of minus 10.8. That percentage of minus 10.8, we're seeing more stocks hit their 52-week low naturally than their 52-week high. But as you can see, occurrence-wise, across market history, it seldomly goes down into these levels. It has a propensity to start moving back up towards 0. And how is that going to happen? What's going to happen when we start getting more stocks hitting their new 52-week high, meaning the market is moving back up and is gravitating back towards the mean, for lack of a better term. On the same side, if that percentage gets above 20% or so, I think 8. He has it here at 8. I'm sorry, it's 8. So when it goes up to about 8%, it very rarely, over the history of the market, continues to go to those higher levels. It does, but it very rarely goes up there and stays. It wants to revert back to the mean as well, which means the market will be pulling back and no more stocks will be hitting their 52-week low as opposed to the 52-week high. Now, I don't know if I have the full history here, but let's take a look. In each of these indicators, when you delve into it, to look at the histogram we just reviewed, or you can look at versus SPX over time. You can see up the top the various years. So this actually goes back to about 2013 with the various indicators over time, and when the series of indicators hit the levels that we're looking for, i.e. when we start getting up to 6 or 7 bullish indicators versus bearish, then that's usually when we start to see a trigger or a change in the market back to the other direction, usually within the next maybe 5 or 10 days or so. And so we've been hitting those light buys, and we haven't seen what we've wanted. It's continued to drop because, as I mentioned before, I always like to look at these bullish buy signals here. And we see some of the... Did I go too far? I did. I'm sorry. Well, there's the October one we looked at, I think, last week. But yeah, here's a couple that we see back in that 3-1 range. I want to kind of isolate that for you real quick. Sorry, there we go. So back here in March or so was when last time we saw a couple of those bullish buy warnings, when SPX had dropped down over, it looks like, a 1 month period from about 41.50 down to 38.50. So almost a 10% drop in about a 30-day period. And the bullish buy triggers started going off at about 312. Now, probably I'd say 310, 311, 313, and then again on about 316 or 317 when it started to recover. And then you can see going forward after that, we get into that bullish run until we start to hit some of the bearish sell warnings here on or around 6:1, probably 6:15 actually, about 6:15, and have a little hiccup. It continues to move up. We see some more bearish warning signs, and then the market starts pulling down, and now we're starting to get into some of those bullish buy signals, as I mentioned. A little rally there. Saw the last bullish buy here from about 40, not a big one, but 42.50 to 43.50. Now, as we mentioned, we're back down into this range. We're starting to see that bullish buy warning again. Commonly, what I look for, not in the overall market sentiment, I should say, is I look for usually about 2 of these bullish buys in a row, or within a 2 in a 3-day period, 2 in a 4-day period. I want to see 2 consistent bullish buys before I really go more all in. But as I mentioned, protection-wise, seeing the market sentiment, how it has worked for me in the past, on Monday and Tuesday, I'm going to start looking at some new protective bullish positions, some new married puts, probably open those starting on Tuesday, I guess, for the radioactive trades. Always hard to open on Monday with those longer term trades, but I might look at some of the weekly bull puts as well, see how I feel about those, even with the market being a little bit sketchy recently. But seeing the bullish buy warnings, seeing the levels that we're getting to now, got to wait to see how the market opens on Monday. Then maybe an afternoon I'll look at some of the bull put credit spreads, and I'll be looking at the married put